Well, what happened today? We have the sideways action. We clearly have a rotation. To me, the rotation tells us a lot about the market as far as the health of the market. Let's clean off all these older levels and let's jump into it. As always, subscribe to the channel, click all notifications. What we're about to go over is extremely timely. So we started off the morning with the pre-market, which is public, and you can always attend if you would like, and I leave those up so people can always just watch them later. They start around 8:15 to 8:30. Lately, I'm trying to get closer to the 8:15, but it is what it is. There's so much information to get through in the morning, it's getting harder. If we really just look at the range on the day, we just kind of bonked our levels right around the 430 and just never really got above it and never really got anywhere near above where the highs were on the day either. And it's just going to be like this, I think, until we get through Jackson Hole, which is Friday. I don't know that we're going to see a lot of institutional commitment. What I do see is I see a lot of shenanigans and I see a lot of nonsense. But from our perspective, the one thing that I think we really need to pay attention to is just where did we go today? Did we go anywhere of consequence? If we just look at today's range and look at it, it's 26 basis points, but it actually felt like torture when you were trading it because you're not breaking out and you're not breaking down. So what you get is a ton of sideways action where your breakouts fail and your breakdowns fail and everybody gets chopped up on both sides of the market. And then you look at the day and look and say the market didn't go anywhere. Why does the market look like this? And why did we not go anywhere? These kinds of days can be very confusing. I have found over the years of doing this. So what I tend to do is just look a little bit at indicators and then say, what are they telling me? So if I look at something like the RSI, and the RSI's really convincing me that it's starting to roll over even more right now. And we look at this on the 4-hour, excuse the different colors. I can get rid of that really quickly here. They always do this thing where they try to, the electronic trading background hours. I mean, like, it's the futures market. Of course, there's different hours. Like, it just drives me nuts. But you can see how you're starting to decline here. And on top of that, you can see this break. And we talked about this break pre-market when we did the public call. Like, look, this doesn't look great. Like, I've seen Groovy before. It doesn't look like this. But you didn't go anywhere. So what do we really have? Well, we have the level that we kept talking about, and we never broke it. We never even got to the top of this level, I don't believe. You just really sat there. And here's that wick to the downside. And all you did was grab that wick from Thursday and then just hold the area. So there's not a tremendous amount to say or do here. What I would say is that you're going sideways here. And so are you overbought? Yes. Do you have a negative divergence? Yes. Has it worked itself off so where you're sideways already? That's pretty interesting because all I need to do is negate by going sideways and then just start lifting up and break the DTL and then this thing's negated. That's really very interesting. And the thing about it is the RSI does tend to lead. You'll note that if you look at where this broke, the RSI tends to break before the actual whatever the underlying asset is will tend to break. So from that standpoint, you can use it as a guide for as a leading indicator. I don't tend to do that, but they're usually there and they're usually fairly accurate. So it's definitely another, let's call it an arrow in your quiver, another thing that you could actually use. But I don't know. I'm not really feeling that. So then that brings me to this and goes, well, what really happened today? And I think this is where it gets somewhat interesting. I feel we're at a crossroads, and I think that crossroads is going to be led by the risk assets. And the risk assets in general have just been Bitcoin. Now, my sense of this is that it's going to crack, but I don't know that. I truly don't. And I'm just going to show you where we're at. If we go to the bottom here and we just come straight up, you have cracked it. So if we take this low point here and we come across and then we look at the tests in here, we have cracked that area. Now, we are working that off and we are oversold and we all see the negative divergence here. So no one's really shocked that this lifted and then from there rolled over and presented like a great short opportunity. But the question is now, do we hold this level? And it's a pretty key level and you are oversold and you've worked off the oversold and you're already starting to hold. So does this climb back over that? Does it go sideways and then roll back over? Well, the first thing that you'd want to do here to know that if you have real trouble is you just want to go to your chart on Bitcoin and just mark that low and put an alert there. Because if you take out that low, which looks like 114.6, then you're going to have a problem because that means that you're on the other side of this trend. And if you're on the other side of the trend, you only have two things you can do, sideways or down, because up's no longer an option. So that's definitely worth watching. But we have the negative divergence from here, and that negative divergence really didn't do a whole heck of a lot. And so what I mean by that is if we look at the top of that negative divergence, and let's say that we used this bar right here, right? All right, so if we see that bar, and then we come to our line right here, right? All right, that's 5%. So overbought to oversold got us 5%. And if you look at this in the past, like here's oversold, and then here's overbought. And then we kind of go here and go, okay, well, that got us to a very similar situation. That was 7%. And so really what you're looking at between overbought and oversold is this getting tighter on the overbought to the oversold? And the answer is it actually is getting tighter. So that means from overbought to oversold, if you look at those ranges, you're at, like, for example, the one I just did here was 12%. If I came to this one and I measured the overbought to oversold, you're getting 10. This one we did 7. This one was 5. So hopefully you get what I'm pointing down. Going from overbought to oversold is happening faster and faster and faster. So when you see that, it tends to mean that these pullbacks in crypto and these things are going to get shorter, but it doesn't mean that you're not going to have them. Now, why I think this one's so interesting is because this is how we set up on all these other pullbacks. And I'll show you what I mean by that. Even if you went back all the way to back to here, to back in the day, even if you went back to the first time where they came out with the futures and everything, you see that lower, right? Lower, high, higher, high, right? And you get this, you see what I'm putting down, right? And so you're getting that negative divergence up here at the top. And you'll see these on more of the minor ones too. But if you go to the big ones, you really can't miss them. Like, they're very hard to miss. And so I always tell people, just kind of pay attention to them. You have 1, 2 in here, and then it rolls over. 1, 2, and then it rolls over, and then 3, and then that was pretty much it. You can see your divergences here. I'm not going to draw them for time's sake, but you can see here to here to here to here, right? You can see the higher highs to the lower highs. So when you see this kind of stuff, if you're not paying attention to it, you're doing yourself a disservice. You can say that it doesn't work, but just like gravity, it really doesn't care if you believe in it or not. The question is, how deep can that go? I don't have an answer for that. What I would say is I'm going to mark off my area here. And I think you're better off with some of the proxies to short. And that's really where I'm going with it. But I did hit the 55 and bounce and then get a green day. I did hit the 55 and bounce, and I'm on the trend line. So the question is this enough? Is that enough of a sell-off? Is this 55 going to hold or not? I would like to have seen more action today on that push. If you look at something like this, yeah, you gave that back, but you also rallied over and then came back. You didn't do that today. The open has been the net seller, which gives me the hangman, which it doesn't make me feel warm and fuzzy. I felt warm and fuzzy today. I don't feel warm and fuzzy right now with this. So what I need to see is, do I get something like this? Right? Because that's exactly where we are. You can see the rolling, the control bar, the rolling, and then all of a sudden, from there, now I've got this doji, the doji flips, and then it goes, we're back over the 55, and we go. Very similar to what you have here, very similar to hitting here, and then boom, you're bouncing off of it like a cat off a hot tin roof. So are we going to respect the 55 again, or are we going to break it? I'm leaning towards that you're going to have some kind of flush here, that there's too much weight going on right now, and that we're going to get some kind of flush. That doesn't mean that I'm right, but I did say this the other day about Ethereum when we shorted it, and I know that this is a completely different story, but my thought process is still on the same page, that you really have to come down to this level. I think it's like 4,100. And really test this and make sure that you hold it. And then you're going to get this mother cup and then this huge, handle on that cup and then go higher. That's where my head is with it. It's not a bad thing, but this fits the same narrative where you have this divergence. Once again, I'm not going to bore you by going through them over and over and over again. Like, again, you don't have to believe in them. You don't have to believe in gravity, but it's still going to work. And so then if we go and take a look at the 4 hour, what is this telling me? Well, they're still walking you down, right? And it's not as oversold on the 4 hour, but on the hourly, it's oversold. And then they already bounced it. And then you're already neutral on the hourly. And that in and of itself is a little bit of a pickle for me. So I think that there's some kind of movement down. And then from there, I think that that's going to start putting in that bottom. That's where my head is. So I am currently short this BMNR. I've been on and off short this for some time. I'm fine with it. It doesn't really bother me a lot. I mean, the NAV, according to the last read, is in the mid 20s. So whether I actually think it's higher. I think they're wrong. I think it's actually a little higher. The SBET is closer to the NAV. So if you're like, you're wrong, boomer, you don't understand, this is the future. Cool. I'd buy the one that's trading near at the NAV. You actually probably could do a really cool pair trade here, which is SBET, BMNR. And the fact that I think this is a cool pair trade probably explains why I'm single. But if you take a look at this stuff here, for example, right, you could see how this is just hanging in there as a pair trade. So like if these guys are going to lift, SBET is going to lift over BMNR, right? Like it just is. So, I mean, that's kind of where my head is with it. On the earnings front tonight, I do want to go through some of this before I get into some other stuff. But I think the whole connection here is are your leaders going to hold? And that's where I'm going with it. Like crypto's been a leader. So is uranium going to hold, for example, right? I think that's where your head has to go because like now you're at the 55 here. And then you look at NLR. Okay, well, you're holding. Well, what happened to BWXT the other day? Well, it started to crack. That was a leader. Okay, LEU does a secondary. That's broken the 55. So what's going to hold up uranium? The zero revenue companies? Yeah, that's not going to work, guys. Like you can see that, right? They're going to crack. They're going to crack the hardest. Why? Because they have zero revenue. So your dreams are either worth 40 or 14. It doesn't matter. It is what it is. Your dreams are only going to be worth as much as they are, right? And by dreams, I mean, you can justify 400 for OKLO. You can just justify 4 for it. It's air. Like there's no revenues on either of those companies. So they're not the ones that you have to watch. You have to watch the ones that have billions of dollars in revenue and see how they're going. I think that's super important. The other thing I think you have to be aware of is what was the biggest driver today? It was block. Okay, well, why was the block the biggest sector of all the sectors today, which is kind of crazy, but why? Well, MSTR. Okay, well, MSTR's got buyers. Why? The rumor that they're going to get added to the S&P 500. I don't know how they would add this company to the S&P 500. And I don't mean that they're not going to, but let me show you what I mean by this. They lost $16. So now you have to put that into your S&P earnings for the quarter, right? When you're trying to figure out your S&P earnings. Now you have to put this into the quarter. Now you made $35. I don't know how you put that into your earnings model. Because if you think about the S&P earnings being something like 303, I think is the 26 estimate. I think it's like 303. You're going to tell me that you're going to have a 10% move on the earnings of the S&P based upon what MSTR does? I don't know how you're going to annualize that. Like that's not my job, but I do think that someone's going to look at that versus looking at something like a coin and saying, well, if we want exposure to it, they did $5. They've done 24 cents. They've done $4. So like we can kind of work with that a little bit better than those big things. And I think that's super important. But that's really going to leave me with where I think we should take the conversation and look at the breadth for a second and say, has that gotten any better? And I don't want to say my changes. Let's go. And to me, and what we're going to get here, just so you're clear, is Friday. And today didn't get any better. But they're all rolling over and they're all pointing down. And I showed this in Saturday's video, and I would definitely watch Saturday's video if you have not. Let's do it this way. We're going to go back to, we'll go to this one, and then we'll get off of this. We're just going to go NDX for a sec, and we'll clean this off. And then all I'm going to do is just go here, and then you guys can make this for yourself. NDFI, I'll show you exactly how to make it so that you guys can actually make this and save it for yourself. I'm going to go right here, click on that button, boom, and then we're going to go new pane below. And I'll just leave this open, high, low, close for a sec. What you're seeing is the market's going higher as the breadth of the 50-day is going lower. And I want to get that to regular so you can see that. And let's make this regular too. All you have to do is click that and that gets rid of the percentages. Then we'll just drop it here. And you can see how you're walking down. You're at that 48%. And here's where you're at. Let's go to the daily for a second. And you can even see it even clearer where you're going higher and the breadth is getting worse. And the thing that bothers me about this, it's not that it can't fix itself, right? It can fix itself, but you're seeing it in the movements. Let's be real clear about this so that we're all on the same page. And let's go back to the candlesticks for a second. I'll show you what I mean by this. So if you have something like PLTR, which got that downgrade today, let's clean this off. And we look at something like this and the pulling back and yep. So like Citron doesn't like it. Citron says it's bad, boo. And then the stock drops. We're not falling out of bed. And that in and of itself to me is the problem. It's the lethargic action, whereas if we had the flush, then it's over, and then you maybe get a couple days of it. Instead, we're getting this apathy. And until we see some panic, I'm not so sure that it's going to end that way. So even with something like a Meta today, where it tried to rally at the end of the day, or it tried to rally into the end of the day, into the last 15 minutes, and then they just got kiboshed. And you can all see that bar at the end of the day from 72 down. You fell apart. You had retail buy to forever, and then institutions dumped on retail's hopes and dreams at the end of the day, and now you're down. If you have this kind of apathy towards selling, going, oh, it's Meta, don't worry about it, or it's Microsoft, sure, it's going to come back. Until we get those kinds of flushes, I think that we're going to have some problems. In and of itself, it might not seem that bad, but until it flushes and you get apathy. And I'll show you how you can measure it. And again, here's the previous close. I've got 2 green days on Microsoft. Like no one can feel great about that. I understand NVIDIA looks awesome because it's NVIDIA and it's trading at, 0.6, its PEG ratio. But at the end of the day, like none of this stuff really looked great today. And I think that that's really what you should go with and understand. Like no one's pointing at a sector and saying, oh, we rotated into home builders today, or Oh, we rotated in XBI today. I'm keeping this one super informal so that you can think for yourself on the questions that I'm asking you right now. Like there was no sector that you're like, man, that sector really broke out. Boy, they really had to buy that today. Or boy, there was a ton of support in the XLK names today, wasn't there? A matter of fact, you're seeing the exact opposite. They're getting out of the leading names. Reddit, I'm still in. And then after they're getting out of the leading names, what they're doing is they're going after the short covering names and they're squeezing them. Like nobody thought that the news on RBLX today was good. The fact that you have the Louisiana Attorney General going after it, California's involved, and there's all these creators that are talking about leaving the platform. Like nobody's looking at this and going, wow, those short sellers sure seem like they're wrong on this. I better get in. Like that's not what's happening. You're having short squeezes on the name. And you might have people that say, I don't believe in it. Personally, what I think you're going to do is if you get a copy of like Kathy Wood and you can get her holdings sent to you every night, you just have to go in the email. It's free. I guarantee you that they're adding to this thing and they're supporting it at the 55, hoping that it doesn't crack. And I think that's where they're going. But this stuff's cracking. And I think we have to just call it what it is. You saw it with CoreWeave today. This was like the mother of all shorts. It took me 3 times to get back in this, or it took me 3 chances to get in this thing. And you can see the rallies where they're just luring you back in. Like, no, come on in. The water's fine. And then all of a sudden, it's only taken 15 minutes, 10, 15 minutes. That's not institutions going, man, we really got to get in this. And then they just do the crawl of death all day until around that 2:30, dentist's favorite time of day. And then they just crack you like a coconut. And that's exactly what happened today. And now you're seeing that. And I always think you have to be just cognizant of this kind of stuff where I'll give you a great example. WULF had a great contract today. Like this contract was great. It was the cat's pajamas. Now the contract's even better, and they're doing a secondary, and Google has a 14% stake in the company. And we're down from the open. Like it makes no sense, right? Because the real companies, what I think they're doing is they're getting out of those and they're closing their short positions. I think they're raising capital across the board. And when you have when you de-lever your gross leverage, all right, let's just do this quickly. So I'll just explain this. So here you have gross leverage up here, right? Here, I'll just bring this all down for a second and we'll just do this super quick. So here's gross leverage and then here's net leverage. And gross leverage, come on, work with me. And gross leverage is going to be your total gross leverage. And that's going to be all shorts and all longs. All right. All right, cool. And then here's just going to be your total gross. Net will be equals net long. All right, I'm just going to do this super quick so you get it. So if my gross leverage could be 150%, right? Because I could have $1 million in the account and I could have 1 million long and 500 short. So my gross leverage is going to be greater than that. When I de-risk my gross leverage, I sell my longs and I cover my shorts and I'm degrossing the market. That's very different than cutting my longs back. So what you could see here and what could be happening is a degrossing of the market, right? And if that's what they're doing, then that makes sense that the shorts are going higher and that the longs are going down. And usually they do that if they think that there's a bigger move coming to the downside and they want to free capital up, or in times of uncertainty like you're seeing with Jackson Hole. But what we're seeing is these names that people are short, like a Tesla, which is one of the largest short positions out there, we're seeing that stuff rally. SMCI is rallying today. Why? I think they're delevering their entire portfolio. Because when I look at some of these names, there was some really good news today. And yeah, they're up a little bit, but they got blown off. When I look and say like Open is my best long of the day, my best new long trade of the day, I really have to look at that and say, well, what does that, what's that really mean for me? It's not great. It's not great for the market. It means the speculative excess names are starting to move. And maybe there's something to this trade. It's going to be the best trade ever of all the trades in the world, right? I don't want to get a bunch of comments, Open forever in my comments tonight, or like you hate Open. But my point being is, if you're degrossing, today's movements make a lot of sense. And maybe that's what they're doing. Maybe they're just taking complete risk off on the long and the short side going into Jackson Hole on Friday. That's it.